Hello and welcome to traders at the fourth and the last week of August, where we have 3 red folders day. Okay, we have Tuesday, Thursday, and Friday. Tuesday at 10 a.m. Sorry, I haven't changed the time, but yes, that's 10 a.m. at 8:30, and Thursday and Friday at 8:30 also. So let's get to Tuesday first. And explain. Lowest low of Monday. Smooth sell side liquidity. Vesting. Price have hit the sell side liquidity at which time? 8:50, gravitating to 9:30, jagging around, and then what? Market shift, immediate. When? At 9:50, at a macro, at a macro. So price have trapped both sellers and buyers, as we see here. Buyers have been trapped, sellers have been trapped, both sides have been taken. And that's a model actually. And the price gravitating to a lower low and a higher high of the day, that's also a model at a specific time, only if you pair time with price, because that's the market. you know so we have a minor sell side liquidity here, as when Michael have explained that sell side liquidity, the minor sell side liquidity at 9 a.m., where we have relative equal lows and relative equal highs at 7, 8, 9. You want to see price making relative equal lows and relative equal highs, and price will always do. So please, if you have that thoughts of the market isn't going to do those relative equal lows or those relative equal highs, please shut those thoughts off, please. Do you know what I call it? I call it demonic thoughts, because it's coming from your demons inside your head, actually. So that's a demonic thoughts, bro. Listen to me. This shit won't stop. What's our motto for HZTradez? It will be repeating every day, every week, every month. That's our motto for ICT. That's the motto for ICT. And it won't stop. It won't stop unless this market goes to zero. That's it. I'm just for the sake of the logic. Will it ever does? There, I mean, think of the algorithm, the people behind the algorithm that they are making millions off of it. Would they ever shut down this algorithm? No. Will they ever change these concepts? No, because it's rigged, and that's how you want the price to be rigged. Otherwise, how will you trade? Every single individual that trades will win, and it won't make sense. I mean, have you ever gone to the casino and got out with a 10 million, 20 million, 30 million? They will kick you out eventually. That's the first thing. The second thing that is that they will kick out everyone who makes money eventually. They will say he is cheating, he is doing something out of the rules. They will make some shitty excuse that doesn't make sense. Okay? Now here, it's rigged. If you make money, they won't say shit. because they are making millions, if not billions, off of these markets. So if you got out with a couple of thousands every week and you are satisfied with it, that's more than enough. For me, in these specific weeks, we have 3 red folders. Do you think that I trade all of them? Fuck no. I only trade Thursday. Sorry, I only trade the first 2 red folders. The first 2. If I lost on one of them, I will trade the third. Otherwise, I won't trade the. I will simply won't trade the third red folder. And for the sake of the price action, I will still uh, explain the all of the red folder date, all of the red folder state. Okay, but for me, I am literally satisfied with with 2 trades per week, or even one trade per week, because some weeks I only get one red folder, and some weeks there are only 2 red folders in that week. And in one of these days of the weeks that have only 2 red folders, one of the days that the price maybe seem jagged, or I don't find my model in that day, so I just won't trade that, and I go to the next following red folder and I trade that. I win the trade and I get satisfied with only 1 trade per week. And yes, it's possible. It is possible, and it is satisfying if you know if you know how you manage your money, how you manage your risk, how your model works. Bro, 1 trade per week is more than enough. Trust me. You can be you can be profitable off of 1 trade per week, and people do that. I know people on the X community that trades literally a 1 trade or 2 trade per month. And do the comparison between you and yourself. Okay, yes, you can be profitable off of 1 trade per month. If you don't believe me, bro, just go and try it yourself. Please take that 1 trade per month that that seems and look so smooth, so obvious, and be satisfied with it. But trust me, as a developing trader and as a developing student, you can take 1 or 2 trades per week, and that will be enough. Trust me. Just manage your risk properly, and you will know what to do. So sorry, folks. So elaborating Tuesday, let's mark out this fair value gap and explain what happened here. So, and I'm gonna remove that sell liquidity, that one, so we can see right and clear. So when you see a fair value gap that is being violated in that way, and if you see 957, it is closed all the way down here. Now what do you want to see here? Now you mark the other fair value gap and you mark the low of that candle. So you have 2 scenarios. Either the price turtle soup that candle, go up, or you would see the price gravitating that fair value gap, that order block, that sidebar order block, and up. But the first scenario I've revealed here, and you would target these uh, these highs where it is a little bit smooth, and these ones, the high of the day at London. Okay, so if you have missed the chance and being a buyer right here, that's your second. Where am I buying and where is my stop loss? Well, it's easy, and I will explain first. First. So your stop loss would be here at that candle. That fair value gap had already been claimed. So why do you want the price to go down there again? It won't make sense. You would have one, two fair value gaps violated, absolutely violated. So we don't want the price to get down here again. That's your first entry and stop. Your second would be here, okay, at the 0.5 of that fair value gap from 1009 to 1011. 0.5. Your stop loss placement would be here at that specific run stop, okay, that specific turtle soup, as this structure is already protected, okay. That's the first stage and that's the second stage of distribution. First target, your second one, and at these two you would also have a pair of 1 to 2. Exactly, yep, 1 to 2 on both of the two trades. So that was for Tuesday. Now on to Thursday. Thursday we have red folder at 8:30. Now it is a classic buy day, where we have the profile of the all sessions going up. By simply looking at Asia and London, you see the price going up, in one directional bias, and you would see a lot of run stop to the downside, and that's your mark. That's your fingerprint of the market maker leaving behind. That the price wants to go up more and more. Okay. Run stops up. So at 4:30, sorry, my bad. 9:30, and we'll also see the prior of 7 run stops all up. So your bias is very clear. You could either be buyer before the opening bell, and your stop would be here, to be exact, because that is a protected structure. That's one also, okay. That's protected. That is clear price action, and you target above liquidity of the Wednesday highs, okay. That can be your target, and that can be your target. But for me, I simply just I only trade after the 9:30. I don't trade before, prior date. So how much fair value gaps do we have here? 1, 2, 3, 4. 4 fair value gaps have been created at the 9:30. Okay. Now, and if you go to the 5-minute, you would see one fair value gap. You could either be a buyer at the high of the first fair value gap, which will be right here, and your stop placement would be here at the 0.5 of that inside bar order block, and at the low of the fair value gap, because simply you don't want these liquidity void to be inverted, these fair value gaps to be inverted. You just don't want to see the price get to that point, and that's your one-to-one. That's your that can be your that can be your first entry. Your second entry would be at the 0.5 of that cluster of fair value gaps. 0.5 would be around here. Your stop placement would be at the 0.5 body of the order block, not the wick, at time 1 to 1, 1 to 1.5, and at that specific liquidity, that's around 1 to 1.86, close to 1 to 2. It was an easy day. Now going on to the Friday, it's the same day profile, where you have all day up, all day up, all day up. But do you see the difference here and there? The price is jagged in a consolidation. Let's say it that way, in a consolidation at the New York and in the at the London and in the New York. There might be a chance to be a seller in that day. Just see the difference. Clear, and that's not an enough of a consolidation. Okay, that's not an enough of a consolidation. Let's say it that way. For those who are talking about, yeah, but that's a consolidation too. Okay, well, have context. Have context at what will occur after 9:30. And trust me, you will see your buy or sell after 9:30. Trust me. And if you have relative equal highs or lows or a specific smooth liquidity when 9:30 headed. Okay, so what do we have here at 9:30? Price go to these relative equal lows, grab it, and goes up. You could be a buyer right here. What is that? Protected low. Where is your entry? Your entry would be that candle. Why? The 0.5 of that fair value gap is violated. Trust me, taking a trade right here will be so much risky. You just don't want that to occur. So that's your entry, that's your stop placement. That's your target. Smooth liquidity. Yep. It could be that one also. Why not? This structure is going to be violated anyway if the price have gone up to here. By experience, you will know. So, but for me, I've decided to take a sell on that day, and I will be happy to explain why. So if you go to the 1 hour and 30 minutes, as I remember, yep, right here, you would have an order block, an hourly order block, and at the 30 minutes you will also have the same order block. Okay, that one at the 1:30 p.m. And as I remember, there wasn't anything at I wouldn't take that as a PD array actually, but you can mark up the 0.5 of that candle. You can mark it up as an order block. Why not? So we have a context at the 1 and the 30 hour as a PD array, and that alone is not enough. Okay, just for your information. So you want to see shift right here, because why here on the body, not the wick? Well, if price did make up a market structure shift here and violated the sell stops, it will turn to the sell side. Your stop would be too much, so it will be on the body. You would wait for a retracement. My entry was here at that candle. My stop was here at that high 10.05. Now at a few ticks I would have been gone out, but I trusted the price that the maximum the maximum area that the price might reach for are going to be at the rejection block here. Okay, at the low of that rejection block, which already sent the price lower right here at 10.05. So we have a context here. 3 minutes onto the market shift. Your stop, your take profit at the smoothness of these lows, which the buyers would place their stops right here at these run stops, if there are any buyers right here, and trust me, there will be. Price won't move if there wasn't any buyers here. 1, 2, 3. You see how smooth these levels are? Just too smooth. That's where your eye would want to go, at the smooth levels, at the smooth areas. Trust me. Build in every trade, build a context, build a framework. What do you see on price action? You must know how to lose in order to win. You must see how the dumb money works. You need to learn how to lose in order to win. So this is how the dumb money works. They place their stops right here at these levels, and the market attacks them simply because they are so smooth, they are so obvious. That's how the algorithm works. That's how can you trade. If you have context, a framework. What is 930 doing? What is the first fair value gap after 930 doing? Where is it? At the 130 would be obvious. Yep. Jagging around. Then what? Since price lower. Yep. And if you see here, we saw an immediate action, an immediate response from the price to send us lower, and to where, to be exact, to distribute these run stops, these sell side run stops, which will eventually lead us to the sell side of the market. And do we have a PD arrays here, right here? Yes, we have order blocks. And what do we have at the 1 minute? At the 1 minute, we have an obvious run stops for the buyers. Again, that's 1, that's 2. These will act as a turtle soup. Buyers and sellers have gotten out of the market, and now it's the time for price to send us low. To where? To the smooth areas, the smooth levels. where the dumb money relates to. And that was it. I hope you enjoyed. I hope you have learned something. If you want to contact me on anything, you can see my X link on the bio of the channel, HZTradez. Just click on the link and message me. So till next time, till next week, be safe. Thank you.